So welcome back to ICT Trading Concept, guys. How are you? I'm very fine. After a long of so many objections, I have decided to make the shorter video, but it's really impossible for me to make the shorter video with lot of information. So I would like to give you all the information, but for that I need to make the longer video. Instead of that, I have decided to make this series so that you guys can understand how to read the price before the entry setup. Okay. So far we have actually started to read the price from here. All of the price action you will get from the first part of this video, of this series. This is the part 3. I will continue this part. So if you didn't watch the part 1 and part 2, please go to my YouTube channel, and from the playlist you will find the price action folder. From there you will get the videos. Okay, so part 1, part 2, this is the part 3. We have watched the videos, the price action from here. And when I was talking about this two fair value gap, all of you remember I told you this is the breakaway gap. So I will talk about the breakaway gap later. In this video I'm gonna talk about this breakaway gap. Okay, the rules all of you know. If you were with me in my live stream, you know, if you have seen after the market structure shift, there is two fair value gap. You will expect that price will come to the first fair value gap, so you have to take your entry to the first fair value gap, and price won't go below the consequent encroachment of the second fair value gap. Okay, so this fair value gap will work as a breakaway gap. And we can see actually price came to this fair value gap. It didn't even go to the consequent encroachment of the breakaway gap. Instead of that, it went higher. It has cleared this buy side liquidity and tapped to the lower part of the daily fair value gap. This is the daily fair value gap from daily chart. And then price broke down. It has cleared all of the sell side liquidity, then it started to go higher. It tried one more time and has made this relatively equal low. That is my next sell side liquidity. I'll just mark this one, okay, as my sell side liquidity. So you see this low and this low, they are relatively equal low, or you can say the very clean low. So this is the sell side liquidity. Now I'll just remove this sell side liquidity because this one is no more important. And right now price is over here. I will tell you how to read the price before the entry. And one more thing, in my second video, in my first video I told you we won't take our trade before 9:30, and in my second video I told you we don't take our entry before the PM session or the AM session. Okay, so whenever price will be inside the session, we will try to take our entry, but before session we will read the price. So if you see, this is the 15-minute chart, and I will go to the 1-minute chart. And just remember this gap, this is from 15-minute chart. This was the breakaway gap from previous price action. And if you watch the previous two videos, you will know how to mark this gap. So that will be real helpful for you guys. So please check that out. Okay, so here is 1-minute chart, and you can see this is the candle from 9:28, and it's Friday 13th October 30th October 2023 Friday. Okay, so price actually traded the lower part of this breakaway gap, but I told you I want to see some kind of reaction from the consequent encroachment of the breakaway gap. So you have to wait until this consequent encroachment isn't trade. Okay, and still this is before 9:30, so we are not looking for any kind of trade. We will see how price work over there. I'm using the replay mode so that I can describe everything, and it will be easier for you to understand. Okay, so price, this is the 9:30, and you can see price actually went higher, but it has closed above this consequent encroachment. Want to I don't want any candle will close above the consequent encroachment if price would like to go lower and take the sunset liquidity. Okay, this is the thinking. So I will watch, I will read the price what it actually would like to do. So very next candle it went lower, and it went lower. We are not looking for any kind of sell entry over here. Why? Because price closed above the constant encroachment. So my expectation will be maybe price can go higher. Okay, maybe it will trade to this new day opening gap, or maybe it will go back over there because it has closed above the constant encroachment. Though this sell side liquidity is very, clean, and it's kind of magnet. Okay, this is actually magnet. Price should go over there. This this should be happen, this is our expectation, but we need to see the price first, how it is reacting. If it reacts with our expectation, we will look for the entry. Okay, so let's see what price did. You see, this is very nice, I mean, market structure shift. If you say this market structure shift, or you can mark this low as your market structure shift, or this low, I don't mind, but we won't look for our entry over here. Why? The reason is price closed above the consequent encroachment. It shouldn't close above the consequent encroachment. That's why we are not looking for any kind of entry over here. So let's see what price actually did. It went more lower, and then it started to go higher. And look at the candle, it went to the consequent encroachment but closed below the consequent encroachment. Okay, I will look for next candle. The very next candle, it also tried to go higher but closed, I mean, it didn't, it can't go and above the consequent encroachment and closed over there. Okay, instead of that, it went lower and closed over here. Will you take for, I mean, will you go for buy to this parallel gap? No. Why? Because this is the clean price action. It is showing you that I don't want to go higher, and there is also your very clean sell side liquidity. In the second part, I told you, you will trade the fair value gap when you will see there is some kind of very clean liquidity. Okay, so from 15-minute chart, we have seen that this is very clean sell side liquidity. Now, when price went to the, I mean, the consequent encroachment and rejected from there, and you see this is a very good run. Now we will look for our entry. We don't need any kind of market structure shift or anything. If price can, I mean, if it can go to this low again, we will take our sell. Where will be our target? This low will be our target. Okay, this should be our expectation now. So I will just put my entry button over there, and where will be our, I mean, stop loss? It should be above this swing high. It has to be above this swing high, though price won't go, I mean, that far, but you have to be careful. Yeah, sometimes price can go little higher and it can just go below, so you have to be careful. Okay, and your target will be here, and it's kind of two is, I mean, 1:2 risk reward ratio something. If you are really, I mean, love this risk reward ratio, it's a good risk reward ratio. Okay, so look at this candle. In this candle, we are in the market already. Okay, so we are in the market. I'll remove this one because this is no need. We are in the market. Do you understand what is the concept? Price actually, from all of the previous price action, we know this is the breakaway gap, this is the consequent encroachment of this breakaway gap. How this breakaway gap should work? The price should go to the consequent encroachment and it should have failed to go above and closed over there. Instead of that, it will go lower, and when the price will go back to the lower part of the fair value gap, we will take our entry if there is a very clean sell side liquidity. So, but our target won't be here. Our target will be the very, very possible area where price should go. Okay, so there should be our entry, and I will go little further. If you look at the price, it went higher, and it was actually, it went back to the lower part of the fair value gap again, and then it was consolidated over here. You look at the price. Okay, it went higher again, but we don't, now we do not need to worry about that, because price has already told us that we would like to go lower from when I saw this rejection. Okay, so this kind of buy side liquidity taken, it has went above the buy side liquidity, and that's why we put our stop loss above the highest high. This should not be broken. If price go above this higher high, maybe we will take our loss. Don't think this will work 100% of the time. Okay, sometimes you will take your losing, I mean, you will take the losing trade. You have to admit that there is nothing 100% certain in trading story, but overall you have to be follow, you have to go with some rules. Okay, so let's see what price did. Very next candle went lower, and then actually you look, this is your, I mean, trade. You have already done the trade. I'll go furthermore. I mean, I would like to see where price did go. It has consolidated over here, and just let me go a little bit further, and finally it has cleaned the sell side liquidity. Okay, so this is actually the trade. Now, do you understand the price action? Let me know. Okay, I'm gonna make the shorter video, but I'm giving you the full, full information what you really need to understand about the price action. So from 15 minutes chat, I'm gonna repeat this again. If you are bored, you can just stop over here. If you are not bored, I'm just telling you the whole thing so that the guy who actually started to see watch the video from this video, he can understand. Okay, so from here we actually read the price, and when we have seen price actually take the sell side liquidity, gave me the market structure shift. There was only two fair value gap. There is one fair value gap, there is second fair value gap. And when we have seen two fair value gap, from my rules I know that price should come to the upper level, upper fair value gap, and it should go above and take the buy side liquidity. This is the rule. But price can go little bit lower to the consequent encroachment of the second fair value gap. That's why we will put our stop loss below the consequent encroachment. This is overall idea of the fair value gap. But we won't take our entry to the 15-minute chart. We actually execute our entry at the 1-minute chart. From 15-minute chart, we are taking higher time frame. Some specific place which will be very important in lower time frame. Okay, so price came to the upper level, upper fair value gap, and went higher. It has clean buy side liquidity, traded to the lower part of the daily fair value gap. In the second part, of this series, the series second part, I described how you will take your entry over there for sell side. Okay, so that was our sell side liquidity, because that was the shallow run. Whenever you will see the shallow run, you will mark that as your sell side liquidity. So price actually came all over this place and traded the sell side liquidity. Then price went higher. When it started to go higher, which level will be very important for us? This breakaway gap will be important for us. I don't care, I don't need this level anymore. Okay, that is not no more importance. So this is our breakaway gap, and I will mark the consequent encroachment of this breakaway gap. Why consequent encroachment? When I have seen price came to the lower part, it is very near to the breakaway gap, and it is gonna be inside the morning session. I went to the 1-minute chart. So from here, just remember. Okay, so this is our 1-minute chart. Price actually tapped to the lower part of the 15-minute fair value gap, which is actually working as a breakaway gap. When price tap here, we will look for our trade entry? No, because it is just before the 9:30 opening. After 9:30 we will start to look for our entry. If the price is telling us will I mean if the price told us that you can take a entry, then we will take our entry. How do you know price will telling you that? Price will tell you that it is a entry setup. If you see the consequent encroachment of the breakaway gap from higher time frame or the 1-minute chart, I don't care, but the breakaway gap consequent encroachment is telling you that I am not going higher, I am closing below the consequent encroachment. Then if you see some kind of rejection from the consequent encroachment, after that, if price can go to the lower part of the fair value gap, you will take your entry and your stop loss will be just above the highest high. Okay, and your target should be the very obviously liquidity. Now if you look at this lows and this low, okay, you look at this lows, this low and this low, they are relatively equal low. Okay, one low, two low, three low, they are relatively equal low. Whenever you will see this kind of relatively equal lows or relatively equal highs, that should be your draw on liquidity. So you will take your entry over there when price came back to the lower part of this fair value gap. Yeah, though this time price went higher and it has taken the buy side liquidity, but most of the time you will see price actually just tap to the lower part and it went lower, it has cleared the sell side liquidity. That's why I don't want to take a risk for missing trade entry. I take my entry over there, I will put my stop loss above the highest high, because this high it can be traded for buy side liquidity, and then this is your trade. So that is overall price action before the trade entry. And if you start to read the price action like that way, sooner or later you will be self dependent and you don't need to worry about anything else. I'm just trying to give you the fair value gap concept right now. I'm trying to clear this, and later when you will understand this, I promise I will give you something more important. Okay, but first learn this concept. It is very important. It's very important. Without this concept you can't trade. In my opinion, you can't be a profitable trader. Okay, so that's all for this video. If you are new and you think this is very helpful video for you or information for you, please subscribe to my channel, give me a thumbs up and share the content. You can comment in the comment box. If you don't understand anything, I always try to give you the reply. So that's all for today. Talk to you tomorrow. See you. Bye bye.